Today in Castoshi, I talked to Ashish and Anand of Brew Finance. They're tokenizing food assets in India so that farmers can get the money for their food without having to sell it immediately. So they're basically getting money up front, and then after 6 months they can collect their food produce again and sell it on the market. So it's providing a liquid asset to them. They're doing quite well. There's currently 1,400 locations where farmers can deliver their goods to get a loan. And we have an interesting talk about how their business works, where they're going, how crypto is related to this business, and how different things are being tokenized. It's a very interesting episode. So I hope you take a look. Enjoy. Welcome to Castoshi, and today we have Ashish Anand of Brew Finance. So welcome, Ashish. Did I get that right first?
Hey, hi, Zubair. Of course, that's perfectly fine as a pronunciation. And thanks a lot for inviting me over here.
Okay, so could you tell us a little bit about just a 2-minute version of what your company does?
Okay, so brew is a word from Old Norse, and it means bridge. So what essentially we are doing that we are bridging the real world with the crypto world at Brew Finance. We are bridging the emerging markets with the developed markets, developed economies, and we are bridging the unbanked with the people who are willing to lend to this particular class of people like farmers, shopkeepers, small businesses across the globe. That's where Brew comes in. We have just launched our protocol on the testnet, and we are bringing emerging market asset-backed bonds on decentralized finance.
Okay. So you're trying to link real world assets, I'm guessing, via NFTs, so that people can use. So people can, for example, store like I looked at your website, and is this so that if a farmer's growing something, what happens? Does he make an NFT out of it? I mean, what's the benefit for someone who's using your platform?
Sure. So there, the part over here is that if you look at current DeFi space, DeFi lending space, it is restricted to digital assets. If I have Bitcoin, I can go and borrow something 50%, 60%, 70% of Bitcoin value from a platform like Compound, etc. But you look at that market is less than $1 trillion in total, while the world is like hundreds of trillions of dollars. So how do we get someone to be part of the DeFi ecosystem who is not holding digital assets like Bitcoin or Ethereum? And not only that is special type of person, actually you and me and everybody else who is listening to this broadcast actually have assets which are not digital assets because nobody is holding 100% crypto portfolio. So then how do we monetize that? Supposingly, I'm a small businessman, I have certain inventory with me, and my TradFi bank says that, hey, because you don't have a 3 years of credit history, I'm not going to give you anything. But that person is holding inventory, which is very valuable in the course of the business. And he is going to generate certain profit from that after selling that inventory. Similarly, if I talk about a farmer has a harvest. Every farmer has a harvest, and which can be used. Say, for example, this farmer says that, hey, I'm not getting the right price in the market right now. I would hold this asset. I would sell my barley crop after 2 years. After 2 months. I'm not willing to sell it right now. Then what happens? He goes to a bank. The bank says, hey, you're a small farmer. You don't have any proof of income because you are dealing largely in cash. I'm not going to entertain you at all. Can we help these sort of shopkeepers? Can we help these sort of farmers, etc.? Because that's the core promise of decentralized finance, right? Bringing finance to the people who don't get it from the traditional finance. So what we do that in these cases, also to secure the lenders, we get these assets, we get this deposited into certain warehouses or vaults, wherein a farmer, for example, can bring his crop, deposit it in a warehouse, and at that point of time, we issue a non-fungible token against this certified asset stored in a warehouse. So it is similar to like USDC is issuing USDC by keeping USD in the vault. So exactly the same mechanism we are using. And this NFT is used on the blockchain. It becomes an on-chain asset. And then, of course, it can be used for the purpose of lending as a security. These are over-collateralized loans. So for example, if a farmer has deposited $100 worth of commodities in the warehouse, we will lend him around $70 so that there is security. At the same time, the farmer is able to run his working capital cycle. He can use this money for the buying some inputs for the next crop. He can use this money for his household expenses.
So did you say you give him 17? So sorry, did you say you give him 17 or 70?
70.
70. Oh wow, that's a lot.
70%. So
okay,
against 100 rupees of $100 of deposit, we will give them $70 of deposit of a loan. So that's a 70%. Because see, these are commodities. They don't fluctuate in price like Bitcoin and Ethereum. They don't fall down by 20% in one day and rise in 20% by one day. So,
but do they go bad? Do they go bad? These commodities, though.
But over a period of time, like so the loan period is 3 to 6 months, short-term loans, while the commodities life will typically be 1 to 2 years. So the commodities which we are dealing with are like staples, like grains, then cash crop like cotton, soybean, corn, wheat, rice, etc. So these don't go bad over a period of like a few months' time or even a year or 2 years' time.
Okay, oh, that sounds quite amazing, actually. So, okay, so just to repeat to see if I understand it. So, this isn't for someone sitting at home, like, who says, "Oh, I've got a computer and it's worth something, and I want to borrow money off it." This is for people who in agriculture, this is for people who commercially sell things. Yeah, not for like normal individual public individuals. And if they're selling food, they basically so you basically they deliver it to you. You see the quality of it, and you assess and then what you do is you give them, basically you pay them to hold to hold their produce. If they pay the loan, then they get their produce back. But I'm assuming, do they get all of the produce back if they pay the loan off? Because that way you've spent money to store it, haven't you?
Yeah. So what happens in these cases? First of all, so we act as a very decentralized platform. So we have a lot of network of service providers, independent service providers who provide these facilities like warehousing, storage facility. There are independent auditors who provide valuation reports about what is the value and what is the quality of the commodity. So these are decentralized third parties who provide this. So it is not like anybody is dependent upon Brew Finance to provide a centralized view. The view comes from, so like we have 1,400 such sort of warehouses on our network.
Oh, wow.
Wherein
That's
the
a lot.
That's
a lot.
So actually speaking, in last 2 years, we have tokenized more than $600 million worth of commodities.
Oh, wow.
I believe that, nobody else has this sort of real world asset tokenization record as which we have created. So to come back to the question which you asked, so as and when the farmer will repay the loan, they will get back the entire proceed. However, they will have to pay the interest and they will have to pay the storage charges.
Okay. So they have to determine whether it's worth it, and if it comes to the end of the 6 months, so does this mean you're only allowed to sell the item after the term has expired? Because if that term is 2 years, does that mean that someone might be holding the grain for say 2 years, and then farmer says they're not?
So we don't allow 2 years loan. We only allow loans up to 6 months.
Okay, so after 6 months, if they
Yeah.
don't pay it, then the farmer keeps their money that they've borrowed. Are they allowed back on the platform if they don't repay the loan?
So what we will do that we will liquidate his asset.
Hmm. Okay, so
So
just like in DeFi lending.
yeah, just like
Okay.
that. Yeah, it's over collateralized. See, the core idea of right now of crypto lending is, or DeFi lending is, that right now we are just coming up as an industry.
Hmm.
Market is not yet at the right stage and not ripe enough for having under collateralized or unsecured loans. So these are over collateralized loans. The only differentiation between DeFi 1.0, like Compound and Aave, and a platform like Brew Finance is that the assets are different. Otherwise, the process of liquidation, process of lending, the loan to value ratio, all of the collateralization ratio, all are kept similar.
Okay, and so when the farm, so this uses NFTs in the background, is that correct?
That's true.
Okay, but the farmer doesn't see the NFTs. They don't know it's part of an NFT. They just see it's a part of a service, and they get a receipt. I guess does that?
So we have given them a mobile app.
Okay.
So the farmers have a mobile app, which is, but it is not a crypto wallet. It's a Web2 solution. So the farmers see that they have a digital receipt. They just don't know that on the back of this digital receipt there is something called non-fungible tokens.
Oh, I see. Okay. Oh, that's quite amazing, actually. So when did you start actually getting the first people on? Actually, could you take us to the story of how you even came up with this
Sure,
idea?
of
This
course,
is
of
quite
course.
amazing.
So you see, I was running a freelancer type of platform for blockchain people way back in 2017-18, and it was a DAO, by the way, at that point of time. We did not call it a DAO, but it was a group of people who were running a consultancy, and we had 300 consultants from across the globe.
Could I ask you to go back then? But how come you were even in crypto in the first place? What was your history to even come up to that?
Okay. Okay, all right. Let me go back then. So I am a accountant by qualification. So a CPA in some parts of the world. In India, we call them chartered accountants. In I believe in UK also they are called chartered accountants. In the US they will be called CPAs and so on. So I have been into debt syndication for many years of my life, and I have been into currency trading and hedging for almost like since 2007-8, before the financial crisis. So I came to know about Bitcoin in 2013. And, I still have those tweets of mine which says that, hey, a software cannot become a currency. I mean, have we lost our mind? We are saying that a software code can become a currency. I was into currency market. For me, the idea of currency was something backed by the government, power of the government. But then I started studying in the Bitcoin ecosystem in 2013. Over a period of by 2016, I had changed. I had gone to the other side, and that's how my entry happened. And I started, social media, talking to people on LinkedIn, etc., etc. And I realized that perhaps there is a way for a software code to become a currency if everybody starts accepting this as a currency. And so in 2017, some of us from different parts of the world decided, hey, let's, what happens? People are looking for someone who can help them to go into this journey, especially small businesses who want to enter into blockchain space, who want to enter into tokenization space, and so on. So that's when four of us decided that, hey, let's form a group which will act as a freelancer.com, and anybody who is into in the blockchain space, whether it's a private or public blockchain, can join that. So we got around 300 consultants onto the platform, and we started offering our services. And that is when 2017-18, everybody was saying that we will tokenize the entire world. We will have real estate trading over the world, or over the crypto exchanges. We will have everything tokenized. And what we thought, that if everything is tokenized, what happens? You can trade, or you will lend. If my asset is tokenized, what happens? Assets go for lending more than they go for trading, real world assets.
Mm.
Like my house or your house, we don't sell for years and years, but we borrow money against that quite frequently. So that was the core idea, that why don't we start something which will lend against the tokenized assets, and that was in 2018.
Mm.
So in 2019, I started this. There was no DeFi at that time, so I went to the CeFi route.
Mm.
So today, so what we did, that we went to the banks in India and said, hey, this is a product called commodity finance, and this is very good for the farmers of India, because Indian farmers are having very small low land holding capacity, land holding. The land holding is something like at an average 2 acres only. So we said that this can be tokenized. There is a lot of use of blockchain here. We went to the banks and we went to the government of a state here in India called Maharashtra, one of the largest states, and they liked the idea. So we had developed our protocol by then in 2019. They liked the idea, and then we started pilot. After a few months of pilot, we were liked by the government, and so we got two entities of the government to become part of our protocol. One is the warehousing entity, and one is the banking entity. And that's how our journey took off over some time. So we have been doing this in partnership with the banks. Everybody is asking, where are the institutions, right, in the crypto world? So, but here is our story where we have institutions. We have banks having like billions of dollars of assets on our protocol, who started lending against tokenized assets. It took us some time, but they have started. Last year, to farmers in India, we gave $6 million of loans against tokenized commodities. Before that, we had been tokenizing a lot of commodities, but the lending process started around 12 months back. And now what we are doing, that we are taking it further, one step ahead. So the earlier where we were dependent upon the banks for lending, and where one part which was not on chain is the lending process. So our warehouses are on the chain, our auditors are on the chain, our farmers are depositing commodities, those are on the chain. But the lending still happens without crypto.
But how did the banks see it when you had did the banks understand the blockchain part, and did they? Because if I talk to people in banks, they still don't understand the blockchain, and they still don't understand lending or smart contracts. How was that reception?
So as I mentioned, I had to convince someone in the who is the secretary of information technology here in the state of Maharashtra. So he's a guy who is from the computer science background. He's himself is a IT secretary. He understood this pretty well. What is the role of a smart contract? How smart contracts can lock the NFTs, and once it is locked, nobody can sell the NFT outside of the warehouse. Nobody can take the goods out of the warehouse, because what we do, the moment it is logged into the smart contract, into the warehouse ERP system, we freeze the asset. So the moment we have a lender coming to lend, immediately the asset is frozen into the smart contract and also into the ERP system of the inventory management system of the warehouse. So what happens now? Nobody can take this goods out of the warehouse. It's a locked security. So that is what happened, that this gentleman understood the idea well. And then he made the other government officials and the other bankers to understand the importance of this. And that's how it went ahead. After that, new lenders came. Slowly, they realized that how it is working. So right now, we are working with 5 banks here in India.
Okay, so as I understand it, is you didn't just suddenly jump everything onto blockchain. You ran 2 systems parallel. You ran everything on blockchain and NFTs, plus you did everything in the ERP system and with the banking. So you ran 2 things in parallel doing the same thing. And and then you're slowly moving things to the blockchain. Is that correct?
Not exactly in that fashion. What we said, that if I pitch to a warehouse that you have to replace the ERP with my blockchain, the guy runs so many other functions. He runs his sales, he runs his HR, he runs his finances on ERP. So it is impossible for them to replace that. So what we did, that we created a bridge between ERP and our blockchain.
Okay, I see. Okay, that makes
Okay.
sense.
Yeah.
Okay, so if someone has, so I'm assuming this means that, do you hold all the NFTs as an organization, or do other people actually then purchase the NFTs as well? I'm trying to figure out the purpose of where the NFT fits in.
I understand. So no, our NFT is not for trading.
Mm,
I mean, it's a huge case. It is possible, but we are not using that right now. There
mm,
are reasons for that. There are regulatory reasons which don't allow us to trade NFTs here in India.
mm,
But these NFTs are actually what the core idea of creating this NFT is to bring the chains, bring the asset on chain.
Okay, so it's viewable. So you can say this person has 5,000 grains of something.
Yes, exactly.
Okay.
So it is viewable across the ecosystem. Like today, if you look otherwise, what happens that a warehouse
Mm,
has the inventory, the bank has no visibility to that.
mm, mm.
So my farmer has to take a printed receipt to the bank and
Mm.
turn around the bank for 15 to 20 days to get a loan.
Okay. And are these public NFTs or are they private in a permissioned blockchain? Like, can I, if I look it up on, like, using Ether or Matic, if can I then see the contract and see what it's pointing to in IPFS? Are they public, or are they set, or they put in a permissioned blockchain?
So far, when we were running into the CFI space with the bank, it was private. Now they are public. So recently, we just uploaded $17 million uh, of tokenized NFTs on Matic chain,
On
and you can
Matic,
see
yeah,
them.
yeah.
Yeah. So on the Matic chain, you can see them. All those assets are there with all the details.
Okay. Do you store the actual like quantities on Matic, or do you link to an IPFS or somewhere else for the data?
No, so what we are doing, that we are actually minting the NFT directly on Matic instead
Okay,
of
so all the data
Matic
is on is on chain.
is
Okay,
on the
nice.
chain. Yes.
Okay, nice. So it's all public. Okay, I like that.
No, so actually it was not public till the time we were working with banks.
But now that's changing and it's
Now it
going
is,
public.
yeah, because we are taking it to the DeFi, so now it is public.
Okay. And so is that what will that enable? Will that enable that someone? I mean, in my mind, I'm guessing this will enable that if someone's a banker and they say, we see that they have, say, contracts for a million grains of something. We think that the weather's going to be like this, so we think we can take that and make money off it. Um, that means they could buy those NFTs from you. But when they buy those NFTs from you, the produce is still in your warehouse.
So Jubair, I'm sorry to interrupt here. Our model is not buying and selling of these NFTs.
Okay.
What our model is, so Jubair is a person who wants to lend to farmers in India,
Hmm,
or say a small business in Southeast Asia,
hmm,
right? And the only way Jubair is willing to lend if the Jubair has right security.
hmm,
So this person, a farmer in India or a small business in Philippines,
hmm,
both of them have inventories,
hmm,
right? Unfortunately, Jubair cannot go to Indonesia, Philippines, or India and take control of those inventories,
hmm, hmm,
right? So what we do that we convert this convert this inventory into a non-fungible token.
hmm,
All right, and I lock this non-fungible token in a smart contract.
hmm,
And what Jubair does, that it is now logged in favor of Jubair.
hmm,
All right. What Jubair does, that Jubair says, okay, you have logged $100 worth of NFTs
hmm,
in a smart contract for me
hmm,
as a security.
hmm,
I am willing to give $70 to this gentleman in Philippines
hmm,
or this farmer in Kenya, in
hmm,
India. So
hmm,
what happens in that particular case, that you have given a loan, you are helping people to achieve financial inclusion, you are helping them to get better income
hmm,
by way of either selling their crop or by way of either doing more business into their
hmm,
small businesses.
hmm.
and you are earning yield. So today, if you go on DeFi, on Aave, you will get 0.58% yield.
Mm. Mm.
And that yield has no basis.
Mm.
It is coming from somewhere we don't know. Like we did not know in what was happening in Anchor, right?
Mm. Mm.
However, if you lend to a farmer here in India,
Mm.
you will be able to earn the yield ranging from 6 to 8%. If you
Okay.
lend to a small business in Philippines, as a lender, you will be able to earn a return per annum return of maybe 12 to 15% per annum. So what we did that we brought the emerging market lending opportunities to someone who is sitting somewhere in Europe or somewhere in the US and is earning 2% to 3% on their 1 to 2% on their checking account.
Okay, but what I'm trying to find out is if it's an NFT that's not tradable, that means that at the moment that the NFT must have a future use that you envision, because at the moment this could also be done without the NFT. Is that correct?
It can be done, but in that case, it can. If we try to do this, if we try to create a global banking market, the problem is you will end up in the regulations, and that won't be permitted most probably. So today you
Oh,
cannot.
I see. Okay, so NFTs allow it actually makes regulation things easier.
Yeah. So what we are able
Okay.
to do, NFTs come to you as a security, and you transfer USDT to a farmer in India,
Mm.
and the farmer gets equivalent rupee in India. Or farmers, you transfer USDT to a small business in Philippines, or you transfer to a farmer in Kenya, for example. They get their fiat currency, but what you have transferred is a crypto. So what has happened that by using this crypto bridge, we have created a global financial market wherein we are not going to depend upon the regulators to say, hey, you cannot do this.
Okay, I see. And is all of the logic in smart contracts? I mean, if I'm a
Yes.
farmer, just say if I'm a farmer and you go bankrupt, and I want to I want to pay back my loan,
Yeah.
is it at the moment, do you decide whether like how to pay them back, or does a smart contract automatically pay them back?
Uh, you mean how the commodities get back if they repay the loan? Whether how the farmers get the
Yeah.
commodity back? The
Yeah,
smart contract.
just say you just say just say you disappear or you get bought out by an evil company, and
Understood.
yeah.
Understood. No, so the smart contract decides that.
Okay, so then it can pay. It will make sure they get. Okay, but the smart contract can't make sure they get the grain back, but it can but because that's the thing I'm trying to figure out is you still have to you still have to link the NFT with the grain because it's a physical asset, don't you?
We have to. So see, in the warehouse, this system of ours, which is blockchain, has a front end,
Mm.
right? Someone has to do a data entry first of all to create the non-fungible token.
Yeah, yeah.
That data comes from different sources. It comes from a Weybridge, for example.
Mm.
What is the quantity? Then what is the quality? If it is something like a turmeric, you will get a lab report for that.
Mm.
But if it is something like corn, you will get an audit report for that.
Mm.
So the audit
Okay.
report data, all this data is put together and NFT is created. When the loan happens, automatically NFT is locked into a smart contract.
Yeah, yeah.
We don't do that. It happens automatically. The moment there is a system which says that the lender has given a loan,
Mm.
and as soon as they say that, immediately, automatically, smart contract locks the NFT.
Okay, okay, understood. So I'm assuming, have you built up quite a database of different types of goods and uh,
So we have to get the goods. So see, these are the commodities which are into the supply chain on a daily basis, right?
yeah.
These are not like real estate, which is not sold. So that's the core idea. Why we picked commodity finance is because it is a very liquid market.
Okay, but do you have different types? Like you have like grain, you have rice, you have do you
Yes.
have yeah.
So we don't have fruits and vegetables.
Okay, you don't have perishable goods then.
Perishable, yeah. So
Okay.
non-perishable. So we have, for example, soybean.
Mm.
We have, for example, corn. We have cotton. We have pulses. A lot of pulses. So in India, there is a big market for pulses.
Mm.
So then we have rice. We have, for example, a lot of millets.
Mm.
We
Mm.
have wheat. We have barley and things like that. Fruits and vegetables is something right now we have not started working, but we have seen that there is a lot of potential in some of those as well, like potatoes, which can be there for the longer period.
Okay, and how's this changing? Like, how's this affect? Like, what's the feedback you're getting from farmers on this? How's
Oh,
it changing their life? Because that's the
uh,
important thing, really.
I would share some of the videos with you. I was
Okay.
recently I was recently in a warehouse just like that. I was just visiting one of our partner warehouses. One farmer was there, and he was just sharing his life story,
Mm,
that why he came to this our platform. So he said, you know what happened? My son got diagnosed with a heart problem,
mm,
and operation, a surgery was suggested to him, and I have nothing.
mm,
So I came to know from one of my neighbors that there is this facility. If you go to this warehouse, you will get a loan against your crop.
mm,
So
mm,
I brought my crop there and I took the loan. And because we don't ask them to go to bank or
mm,
anywhere else, they get the
mm,
lending directly on the platform
mm,
immediately. So I took that money and I got my son's operation done. I mean, that is the
mm,
best heart touching story I have heard
mm,
about, and it gives us so immense pleasure. I cannot tell you. My that This was the core idea. That is
mm,
what we started building this for the farmers. There are so many stories I will share, that where they have used the money, they have used for paying for their they have used for buying tractors also.
mm,
Some of them have used that money for
mm,
buying or paying the education of their kids,
mm.
and so on. So I will share some of the recording with you. Those are in vernacular languages, but
Mm.
we have put the translation there.
Okay, that'd be interesting to see. And so the main problem for them has been that they've had grain, and sometimes is it that they just get a really bad price, or they just can't sell it yet? Or
Exactly. That's the
okay,
core thing we are
okay.
solving.
And is the platform growing? How's the growth at the moment? Because I know we're in this coming out of the pandemic, and there's
Right,
been a
right.
lot of
So,
fiscal
by
tightening.
the way, let me tell you, we did all this activity during the pandemic. My
Mm,
first pilot started on January 28th.
mm,
And in March, we got the pandemic coming, you
mm,
know. So whatever we have done during the COVID period. And
mm,
that's has really helped the farmers, because the markets were closed. Farmers could not go
mm,
anywhere. There was no market to sell. And then they got this opportunity. Hey, if you can't sell, come here, deposit it, and we will give you money for this. And that is how it started. The growth has been quite good. The, it took us few months for it to make operational, because we had to tell the farmers that what we are doing.
mm.
But we currently every month we are doing $250,000 of lending,
Okay, okay, nice. And
and that that is only in the farmers segment. Now this year, I mean, we are slowly it was. Uh, Sorry, I said wrong. It was $250,000 earlier. Now it is around $750,000,
mm,
700 to 800K every month, which we are doing.
mm.
And we are expecting that by end of this year, we will be reaching a $5 million of disbursement per month.
I think it's worth noting here for viewers who are in the West that this value they should, when they try and convert it to US dollars, they should actually make it 10 times, because because products have such a different price in
Exactly.
yeah,
No,
yeah,
so I agree with you that I mean, on PPP basis, if I have to convert that,
mm,
this will take times.
yeah, it's actually a lot, yeah, it's a lot higher, yeah. Okay, so how do you see this like evolving? Because I mean, the way I'm seeing it is you're providing a good service, and you're using the blockchain as part of the tech infrastructure. But you've kind of, like, I see on your website you say DeFi 2.5. Now, the thing is, you're still linked into the old system, because farmers could still do this without having the blockchain component. You could have said we won't have the blockchain and we'll give the farmers an app, and because they trust you, of course. Um, so I'm assuming that because you're tokenizing this stuff, you've got a kind of future vision around those tokens of where you see that's actually going to be. So it's going to be more crypto native. Am I talking sense, or am I reading something
No,
into it?
you are 100% right. So DeFi 2.5 is something we have coined because what we believe that Web3 is a great thing. It is very futuristic. But right now it's a niche part of the world. The world will take a number of years to become crypto native. So crypto cannot sit in isolation and say, hey, we'll wait for the world to come to us. We have to go to the world, right? So that is where the core idea was that using DeFi, using this blockchain protocol, can I create two things? One, can I create a global financial market? So that's the core idea, that by tokenization and by bringing it over a permissionless ledger, I am allowing anyone to become a borrower and anyone to become a lender. What is our job? Our job is only to facilitate that transaction and providing an assurance that NFT is really backed by something. And that's the one part. And the second part is, can we create a global market as well? As COVID has showcased us, as the current ongoing war has showcased us, that food commodity security is a very important part of the world's life today. Food security especially.
Wait, your system's in India only at the moment, is that correct?
At the moment, but our vision is, so right now we signed up a partnership in Philippines with the Farmers Group. We also signed up a partnership with in Singapore with a stable coin issuer, so that we can do the transaction in the native currency of Southeast Asia. So these are the partnerships which we are signing. We are actually looking to take it global. In India, we have been supported by World Bank, for example. So they funded us our journey as well. And now that is helping us to take it to other parts of the world, like agencies who are like, say, for example, FAO, Food and Agriculture Organization, or JICA from Japan. They all are in discussion with us that how we can take this solution to Africa.
Okay, so can I go back once again? So if I'd been a farmer in the old days, and I had my crop, and I wanted to, and I couldn't really. I mean, if they can't sell their crop, does this mean that you're the one, you become also a bit like a market, because you have to assess that crop? But if a farmer couldn't sell their crop, how painful was it, say before the pandemic, to get that crop assessed, or do they not know? I mean, how did that work? What was the process before you came along? You existed.
The major problem was that the farmer was forced to sell.
Oh, I see. So he had to keep everything on his land as well.
Yeah, and the storage, I mean, you cannot keep on the land. There is so much problem. Plus, if a farmer, especially a small farmer, doesn't have liquidity, how he is supposed to run his household? And farming is just like another business. So you need working capital for the next cycle and continue doing that. So as a farmer, if I don't sell my crop, I don't have money for my business, which is farming. Neither I have money for running my household. So in emerging markets like India, what happens that the farmers are forced to sell. If they are getting 30% lower, they will have to sell that because they have no other option. Somebody else
that makes sense.
Buy from them, store them for 2 months, and sell them.
Okay, and for you, like, I guess part of your business, and also one of the risks you have to manage, is when you get all of this inventory in, you have to make sure you have proper cooling, proper humidity, and pest control, so that you don't, because if you get because what happens then if you get the inventory in and you have a fire in your warehouse, or someone sabotages it, because then the farmer can't get their product back. That kind of breaks the contract. What happens in a case like that?
So every deposit in the warehouses is insured.
Okay. So these are your costs.
Yeah. So because they pay storage costs, so there is an insurance which is taken by the warehouses on our platform. And today in our warehouses, it is something like $800 million of insurance because the commodity value is around $600 million. So $800 million of insurance exists to protect against any sort of loss, including burglary. Plus, like a fiduciary fraud, someone takes it out of the warehouse, or the warehouse keeper himself takes it away from the warehouse, and things like that. For each and every activity, there is an insurance. And when we generate this NFT, the insurance data is also provided.
Okay, so you have these 1,400 people who, or companies who are doing storage. Have you had any bad actors in the system? Any cases where people have taken the food and sold it themselves? And
so not 1,400 companies, a few companies who have these many number of
1,400 locations. But have you had any cases where things have been stolen? And
not stolen. We had only one case so far in last 2 years, where one person tried to take loan from two places.
Oh, so what do you mean? So they had the grain.
Yeah.
But how could they do that? Because they must have delivered the grain to the first location. Then they didn't have the grain. So how could they try and get it from another?
So what they did, that they came to our platform, got the NFT generated. Then on our platform, they applied for a loan. And what they did, that they just created one fake receipt and went to someone and said that, hey, I have this receipt. But unfortunately, the guy did not know that any which way, even those people who are not, those lenders who are not on protocol, they will come back to us to verify. And we have kept that part open. Anybody can verify that whether this receipt which is coming from our warehouses, is that a genuine receipt on the blockchain. So our so Explorer part of that is open.
Okay, so someone lied and said that they had goods they didn't have, but it failed the verification.
Yes, exactly.
Okay, so it couldn't have even worked. So you have a good safeguard. Okay, I like that. Yeah.
Yeah. So that is what we have seen. Nothing else has been. We have in 1 year 0 delinquency. I mean, there is not a single case where the loan was not repaid.
Yeah, it reminds me a bit of microfinancing because they have a very good payback.
Yes, but we are different from microfinancing in one sense. Our cost of lending is 30% to 50% of microfinance cost.
Okay, so it's a much lower cost. Yeah.
Much lower. So microfinance in India runs typically at 24 to 26% per annum.
Okay. And okay. And when people
we lend at 9 to 12%, yeah.
Okay, and when people, out of all of the farmers who send, I know I'm saying grain, but it could be something else. So if they send you their grain, what percentage of them, or what percentage of the produce you get, do they actually take the produce back at the end?
100%.
Oh, so all of them actually take back their produce at the end of the time. So they pay back the loan.
You've had exactly. That is what I said.
Oh, so you haven't had to have a single case where you've actually sold the goods at the end?
Exactly. That is what I said. 0 delinquency means, I used a banking term. I should not use that term I should say 0 liquidations. In the DeFi language, if I have to say, I would say 0 liquidations so far.
Okay, that's good. That means that it was a fairly stable price market, because I think the real test, I'm guessing is when, if you have a time when a lot of farmers, you pay them the 70% and then the market falls, say 50%.
Right. That's
the real test. That's the test you also have to face.
I agree with you. Fortunately, commodity markets are quite safe markets from that perspective. Of course, sometimes we will have in cash crop, especially like in soybean, it happened in India. But that was a very temporary dip. It happened for like 5 to 7 days. All of a sudden, from 5,000 rupees per quintal, which is something like, you can say, $700 per quintal, the price jumped to $1,400 per quintal within 3-4 days.
Wow.
And within next 3-4 days, it came back to 5,000 rupees per quintal.
I see. Okay.
That happened last year. We saw that. So that is when the soybean farmers last year, we saw that happening. But because this is a small part of their deposit and the loan, we saw that even those farmers paid it back, because it was not, the fluctuation was only for a very small period of time.
Okay. Yeah.
So for that, we have safeguarding mechanisms. When there is a fall of 10%, at that time, we reach out to the farmers that, hey, you have to pay us more deposits.
Okay, so they might have to pay some of the loan back, or they have to give you some more produce.
Yes, some of the
Okay, so
more
that's how
produce.
DeFi, a lot of DeFi ones work as well. Yeah.
Exactly, except that we have kept the margins at 10%. So every 10% fall, we will go to them and say, hey, you pay us back or you deposit more so that my collateralization ratio of 70% is maintained.
Okay, otherwise you liquidate the position.
Oh, yeah. I
But
mean,
you haven't had to do that yet. Yeah.
yeah, we
And
never had
and
that.
and how's the price determined? Do you do it manually? Do you sit around and discuss it manually and determine it on a day-by-day basis, or do you use some sort of outside price, or is it a combination of that and
So
outside?
we have price oracles for this
Yeah.
purpose.
Okay.
So we get the price data from several exchanges,
Mm,
all commodity exchanges in
mm,
India, and we put that price together, and
mm.
that price becomes the average price.
Okay. And how do the commodity exchanges react to this?
So certain, I mean, in India, I can go to the National Commodity Exchange and see DEX, and
Mm.
I can get the data on a daily basis without paying them anything.
Okay. Okay. Fair enough. No. But I mean, are they
Right.
have? I guess at the moment you're too small for them to care about it. But as you're growing, are they starting to? Are they
Uh,
starting to see that this is a model they're interested in, or acquisition?
Actually, we have proposition from one of the exchanges to become their partners, by the way.
Okay, okay. So
Okay.
they have noticed you. Okay,
And
great.
actually speaking, what happens in India, there are commodity futures market, but there are no electronic spot markets.
Mm.
So
Okay.
the
So the current
spot,
price, they don't have the current price
no,
as
you
well.
have the price. It comes from the daily market. So
Mm,
what happens that markets are controlled in agri markets in India are controlled by the government.
mm,
So every day the government will publish that this is my price for the day,
mm.
not the price for trade. It will publish that what was the trade data.
Okay, okay,
And
got
we
you.
have developed oracles which pull the trade data and push it on the platform.
Okay. Okay, so when you're talking about the oracles to get the data, because so you're developing this stuff in the crypto space, is the stuff you're doing, are you using existing stuff and keeping it private, or I mean, I know the stuff you have is on the blockchain, the smart contracts, but are you also are you making standards that other people can use as well, or
So at this moment, no.
okay.
We worked on the use case side. We
Mm,
did not work on the infrastructure side,
mm.
but probably in future it will be possible.
Okay. Okay. So I think now I also understand about the position you're in now and how and you want to take this system and you're trying to get it and you're trying to get it into Singapore and Philippines as well. Um, and so that makes a lot of sense to me. So where do you see like the whole future of this in relation to like where do you see crypto is taking this whole industry for farming and finance and everything? What do you see is happening in the next 5 years?
So, so see, I mean, we are into the farming space, but if you look at
Mm,
in last few months, you have products like you have platforms like Goldfinch,
mm,
you have Centrifuge, you have Now's platform and Now's Capital and all, who have tried to bring this bridge between the real world assets and the crypto lending, and that market has well established. Goldfinch has grown like anything. Now,
mm,
Centrifuge has become a like 700 million TVL platform.
mm,
However, what distinguishes Brew Finance from everybody else who have tried this, that Brew Finance has this entire established chain in the behind.
mm,
We have the borrowers, we have the tokenization protocol, we have the vaults, and all of that is different parties. They are not owned by us, so they are in a very way they are decentralized as well. And the borrowers make the loan request directly to the platform. However, when we talked about likes of Centrifuge, what they have done that they take money from maker,
mm.
give it to fintech in somewhere in the world, and that fintech is further distributing. So what we are trying to do that we are trying, so we see that this market is growing. Everybody in last 15 to 30 days has talked about real world markets after the fall. So we see that this market is growing and everybody's attention is coming to that. However, where we are building that, okay, we will bring a better decentralized version of this than taking money from the crypto protocols and giving it back to the fintech. so that the transparency of the assets and transparency of the lending is on the chain instead of going behind the walls of a fintech
Okay.
somewhere.
Okay.
So what we see that in future, it is my opinion, and I have been building for this future for last almost 3 years now. That in my opinion, the future is a mix between the crypto and real world. Otherwise, crypto will not have the growth which we want crypto to have, and that is where we are. Maker has started its uh, with centrifuge. They have started the real world market. Aave has started their own real world market. Protocols like Goldfinch have come, Brew Finance have come. So when all of us are going towards this, we believe that this is the next frontier for DeFi, actually speaking.
I think this is so interesting for me because I'd heard, like you said, in 2017, people were going mad about tokenizing stuff. But the thing I always had in my head was, how do you know that when you have a token, that the actual thing is there? So, what do you think is a big mistake that people? Because I've seen some companies trying to tokenize things, but I mean, for example, like you can see people trying to tokenize the dollar, and then and if it's algorithmic, they have to keep the peg. So
Yeah,
the only ones which work are things like USDC, which put it in a vault, which is the same as you gave the example in the beginning. You're the equivalent of USDC because you store the things in a location. Do you see a lot of players and companies in the space who are tokenizing things, but they don't have the underlying asset there?
uh, I don't believe in. I believe that will create more problems than the solution it will
No,
offer.
no, no. I'm saying, do you see a lot of? Have you come across? You don't have to mention names, of course, but have you seen? Because I'd consider these bad actors where they're trying to recreate the fractional banking system of and where they're selling tokens for things which don't exist. For example, like with Bitcoin exchanges, if you buy a Bitcoin in an exchange, they just add one to a database inside the exchange, and then they lend out your money often, and they don't even have the Bitcoin, you know.
Yeah.
So they're just taking your money and lending it, so you're double exposed. So do you see that there's a lot of this sort of stuff going on with people saying they're tokenizing things?
So I did not see this sort of behavior. Maybe perhaps I did not get exposed to that sort of behavior. But what I have seen that people have made business decision mistakes.
Hmm,
For example, they wanted to tokenize real estate.
hmm,
Their idea was that they will create a liquid market for that. The
hmm.
problem is that the people who live in the houses, they don't want the liquid market for this sort of what their asset is.
Oh,
So
they don't want
I
to be kicked out suddenly. Yeah, that's a
Yeah,
good point.
exactly.
Yeah.
Or they don't want that their asset is like they are not going to trade on a daily basis, right?
Hmm,
So why to create a derivative market on top of that? So I believe that where the asset tokenization companies went wrong was that they were looking for creating liquidity in markets which were not really needed, where liquidity was not really needed. And that's why we have seen that there are a number of organizations who have not been able to crack deals or have been able to create just one single NFT over a period of 3 years, despite being funded millions and more billions of dollars
hmm,
by the venture capitalists.
hmm,
So that we believe was the big mistake into this space. But I believe that Swift recently came up with a report. It says that by 2025, $24 trillion of assets will be tokenized.
hmm.
So I believe that that now people are changing that, and number of things will work towards this direction.
But if
Because
these assets are sorry, if these assets are tokenized, does this mean that the NFTs that you make eventually, because at the moment, like there's a lot of games and in some of these like play to earn games, they have their own NFTs, but you can't use those NFTs outside of that game. Does this mean that the NFTs you have in the beginning, they're only used by Brew Finance, by yourself? Does this mean that at some point there'll also be a use case to have that NFT used outside of your organization?
certainly, I mean, this see first of all, it is not within the organization. Our NFT are actually property of the borrowers, property of the depositors who have deposited in the warehouses. The NFT is only giving it a color of a token. and Brew Finance is facilitating them. We don't have any ownership of them. But you are very much right that today they are being lent on the Brew Finance protocol. Tomorrow, anybody can come in and plug into their system. They can say, hey, I'm in Cambodia and I have a lot of small businesses over here who are looking for financing of their receivables. So they can plug into our Brew Finance ecosystem. And similarly, we can start lending to those small businesses, those protocols as well, who are actually tokenizing some part of their asset somewhere else in the globe. And also it helps to create a global market for the assets. Not the huge primary use case we are focused upon, but it does. It can create a global market for the assets, wherein the assets can be transferred using a token.
Okay,
and the possession of the asset can be taken at a later stage.
Okay, yeah. I mean, like, just say, for example, OpenSea or do you know Mintable as well? So just say OpenSea or Mintable suddenly started to list like commodity assets on their platform, which is very possible. If they started to list commodity assets, then does this mean that if you were a farmer and just say that they'd borrowed money from you and they'd got the cash, but then suddenly they were like, I have to change my life. I want to leave the country. I'm going to do something totally different. I don't want to pick up my grain. Does this mean that they could then sell their NFT to another farmer and then he could pick up the grain at the end of the contract?
Exactly.
Okay, I like that. Yeah.
We already have designed that. Actually, we already have designed that system here in India.
Okay.
We already did that. But in India, we ran into regulatory trouble when we tried to do that.
Okay. So you can do it, but you're not allowed to make it go live.
Technically, I can do that. Regulatorily, I am not allowed to do that. So we have applied to a license for this exactly the same purpose.
Oh, okay. Okay. So going to licensing, does this mean that when you have when you're doing these platforms in Singapore and Philippines, you'll also have to have a local team to sort out the licensing and the warehouse and everything there and understand the local culture?
That's true. That is what I was saying, that Brew Finance will partner with other organizations. Like in Philippines, where we have partnered with the farmers organization. It's the farmers cooperative, which has around 60,000 farmers with them. And now they will take care of the local part over there.
Okay, that makes sense. Okay. And
because it is impossible for us to understand the language, to make the people understand what we are doing, unless and until we have local support.
Okay, that makes sense. And I was going to also ask about so for farmers, I'm talking about the future. I want to talk about the future of crypto. And so as where do you see it going? Like, if you do you ever, when you talk to farmers, I assume everyone has a mobile phone and they'll have their local language installed on it. So I know in India you probably have to do you deal mostly with the local languages or just English or Hindi?
No. We have to deal in local languages. So we have a lot of languages in India, and at least 30 to 40 of them are mainstream languages. So we have to work in those. Like, for example, where we are predominantly working with the government of Maharashtra. So our mobile app, everything is in Marathi language. Even the video which I will send to you will be in Marathi language.
No, I'm actually half Indian from Karnataka, so
I see.
I know, like, there you'll have Kannada, for example.
Right, exactly.
Yeah. Okay, that makes sense. Okay, and how do you find farmers, like, when you talk about it's on the blockchain? Do they understand that, or do they just care about the sell? Do you ever have to talk about MetaMask, or like do you see people in India, maybe say people who've grown up in not in a big city, like in a village, do they understand concepts like MetaMask and crypto and digital currency and all that?
No way.
Okay.
So what they know that I have a mobile phone. In this, I can download this app, and in this app, I can see all the deposits which I made on the warehouse, and I can click one button which will say borrow. I mean, in their local language, and it will connect me to a bank, and the bank will give loan and transfer the money to my bank account.
Okay.
Okay, so they understand this process, that this mobile app gives me information about all the deposits I have made in the warehouse. And against that, I can borrow money from using this mobile phone. Number of our farmers don't have mobile phone also, or sometimes they don't have a smartphone. So for them in the warehouse, we have given a system, dedicated system, where they can come and can do all these activities related to borrowing, etc.
Oh, okay. But who gives the support? Because is it your partners? They give the support.
So the partners, so in every warehouse, there are two persons who take care of these activities.
Okay, okay, that makes sense. Okay, I think last question then about again about India actually is so. Do you think like have you traveled? You've I assume traveled to Singapore and Philippines or
I have traveled to Asia quite extensively, but so in emerging markets, yes.
okay, so which countries do you think are really, I mean, I know Singapore is very advanced with crypto and stuff, but what's your opinion of the countries in Asia and how and the future of crypto in these countries and how, because I know in India had some very difficult regulation with crypto. What do you see as the future of crypto in Asia?
So, so see, Asia has been one of the early adopters of crypto, actually speaking,
Mm,
especially at retail level.
mm,
India was a different story, but you look at Japan, you look at Singapore, you look at
mm,
Korea, these were the
mm,
markets. You look at Dubai.
mm,
So these were the markets which actually adopted.
mm,
You even if you look at Thailand, for example,
mm,
if you look at Indonesia, all are the places where crypto was fairly adopted.
mm,
And number of times I have seen for last several years that crypto was also used for remittances a lot,
mm,
because number of these countries supply migrant labor to different parts of the world. So I have seen them being adopters both on the real adoption and remittances especially, and also on the speculation part. So Korean
mm,
speculation is well known across the globe.
mm,
Japan was one of the first few countries to issue licenses up to the exchanges in the
mm,
world. Singapore has been quite active on the crypto front. Even their monetaries, the MSA, their
mm,
central bank is quite
mm,
active on that front. Dubai has actually adopted a lot of blockchain innovations and is now turning into the new crypto hub of Asia. Actually, most of the Indian founders in the Web3 space
mm.
are today based in Dubai.
Yes, correct.
Right?
Correct. Yeah.
Yeah. So that is where we are seeing. So in my opinion, because Asia has this habit of leapfrogging technologies.
Mm,
We were not at the I mean for last so many centuries.
mm,
I mean after the 17th or 18th century, till that time we were at the forefront of the innovation and all. But after that, we have been quite on the other side of the curve. So what happens in these countries that you see a lot of leapfrogging.
mm,
So in India, landline phones never became,
mm,
quite popular, but mobile phones are very popular now.
mm,
Pager was never a thing in India,
mm,
never came.
mm,
PCs are not available in most of the places in India,
mm,
for example,
mm,
but everybody has got a smartphone. So what I see
mm,
that crypto will have a similar impact here.
mm.
The Asian economy will adopt crypto and will adopt into the big way because it solves there a lot of problems which are not actually even prevalent in countries where you have good financial ecosystems established.
Mm,
So these were the countries which will actually give buzz to real usage of crypto.
mm. Yeah, I agree with
That's,
that.
that's my opinion.
Yeah. And you said that a lot of Indians are going to Dubai. Could you expand on that a bit?
Okay. A lot of Indian Web3 founders, because of the taxation rules in India and
Mm,
lack of clarity on regulations, so
mm,
they have moved to Dubai.
mm.
It has, and that's where. So Dubai has become, the de facto place for everyone who is trying to do
Oh,
anything in free
oh,
space in
really?
India.
Not Singapore. I would have imagined it would have been Singapore. I didn't know it was
It
Dubai.
was, it was till last year.
What? Why? What changed?
Uh, so, so Singapore has started tightening its regulations around crypto.
Mm,
Since 2020, 2021, we have seen that. And also because at the time of COVID, Singapore was one of the tightest regimes to get a visa.
oh, I see. So are you saying it's easier to go to Dubai than Singapore?
Yeah, I'm going to Dubai on 28th. So I
Mm,
guess applied for visa day before, and I got
mm,
my visa yesterday night. And so I am going there for a fintech event. So that is what has happened. And so especially in Dubai and Sharjah earlier also there were a lot of Indian people. So that has helped to create a ecosystem as well.
Oh wow, that's amazing. I didn't know that. I didn't know that. So
so they are. I mean, nowadays what we have seen that even Asian like people from Asian crypto hubs like Singapore, Korea also. Number of them are also moving to Dubai.
Oh, so they're leaving one crypto hub and going to an even better one. So it's
Better one. So it is like hopping, so everybody was Switzerland. From there, they went to Bahamas. And from there, they went to Singapore. Now, Dubai is the next destination for everyone.
Have some people left Switzerland as well for Dubai?
So I won't say Dubai, but if you see that whatever was the hub in 2017-18, Switzerland, Estonia, they are not popular in Gibraltar. They are not popular anymore.
Yeah, right, I mean, I'm based in Gibraltar, but you know, but but here, I mean, there's only a handful of crypto companies. It's not many. It's not like Dubai, you know. In Dubai, I mean, from what I hear, like, you know, not every second person, but there's a huge. It's a lot bigger. I mean, Gibraltar's a small place, so
exactly,
and it's very highly regulated. That's the thing.
So it's regulated, no doubt about that. But then you live in Dubai and trade somewhere else, and that is how the business have been created.
Okay. That makes sense. Okay, so I think I've exhausted all of my questions. I think you've answered everything really well. Would you like to spell out, for the sake of the audio podcast, where people can find you and the name of the company and stuff like that?
Sure, of course. As I am Ashish Anand from Brew Finance, our website is www.brubrew.finance, and our Twitter channel is brubrew_finance. We are also with the same ID on Telegram as well, so you can so everyone can find us there. I myself, my Twitter, Telegram, Discord, everything is CryptFin. CRYPTFIN.
CRY double P?
No, CRYPT.
PT. Yeah, I can't even spell crypto. See,
that's crypto and Fin.
Yeah, Fin.
So
okay.
FIN.
And that's your personal one.
That's my personal one.
Okay, great. All right.
_finance is the official one.
Okay, so it's really nice to talk to you, and I'm going to keep an eye on your project. So thank you very much for today.
Sure, Zubair, thanks a lot for inviting me. And we just launched our testnet. Please test our product, give us your valuable feedback, and we will try to improvise that.
Okay, and they can get to your testnet from the main website, can they?
On our main website, also, you can find it. So it's available on the Matic, so you can see over there.
Okay, great. Okay, thank you.
Sure, thank you. Thanks, Zubair. Have a nice day.
Thanks. You too.
Nice evening, Radha. Bye-bye.
Bye.